Mm-hmm. Mm-hmm. I know what you're saying. I know what you're thinking. Brandon, are you in a snuggie? No, it's a poncho. Don't you ever disrespect me like that again. But without further ado, people, listen. We've got some zestiness occurring. I don't know. Everybody should have been getting the info, but like I said, I know a lot of people leave this information out with all the other YouTube channels. But you know we're going to cover it, guys. Listen, without further ado, we're going to jump into a video from our sweet redhead, the sweetest redhead we know, the best cougar in the market, Miss Liz, speaking to Scott the Riddler about the Bitcoin spot ETF that, like I said, y'all better be aware of what's going on. The greatest generation of wealth transfer is occurring. You can leave your yacht, but I promise you I'm going to get mine. We're going to drizzle that thing over to some other crazy things that occur in the market. Specifically, some things happen with our AMC stock that I saw yesterday, and I said, you know, it's insane. Part of being cued off of how small the amount of short percentage that's occurring in the dark pool, and then the correlates. Like I said, we're not going to spoil too much here. We're going to double tap into that later, but let's go ahead and cue that wind effect. Go ahead and cue it, people. We're right on the air to something. We're on the air to something. We're on the air to something. It could be doom, it could be boom, baby. It could be doom, it could be boom. Bring it in, 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 folks. Let's get down to it. Without further ado, Miss Lizard.
Floor show and our star traders of the hour, Teddy Weisberg at the NYSE and Scott Redler. Teddy, the two-year yield is rocketing to the highest level in 16 years. It's at 5.019% right now. What message does that send to investors?
Well, I think the ADP numbers today, and now we have to see what we get tomorrow with the employment numbers, but it just reinforces what the Fed has been telling us about at least 2 more rate hikes and possibly more. I mean, I think they're going higher, Liz, and I think and who knows how long it's going to go on. I mean, everybody's trying to game what the Fed is doing, but the reality is the economy remains strong. The employment
and that's the key point that people, like I said, we have these discussions often in the comments, guys. Listen. We all have expectations of things coming down as far as recessions or resets and things like that. But like I said, don't miss out on the point of what you're doing as an investor. Being an investor isn't about trying to avoid a recession. It's putting your money in play to go through a recession. That's the keynote. I want y'all to catch that and don't let that go past your head, because a lot of people think it's like I'm going to wait for out of the recession. No. There's prices on companies that are changing the future. That's the cue of it, period. Now let's get back down to
numbers support that, and you have the federal government continues to spend money like a drunken sailor. So you got the government spending money on the one side, and you got the Fed trying to deal with inflation and raising interest rates on the other. They're kind of locking horns and going in opposite directions. I don't know how long this cycle lasts, but clearly interest rates are probably going higher, and at some point, not very good for equities.
Okay, but not good for equities, but equities, at least not today, but they've climbed the wall of worry. But Teddy, let me just say, I'm looking at the shorter part of the yield curve. So the 2 years at 5% plus. We've got the 1 year at 5.45%, 6 month at 5.5%, and so on. Do you still park your money in treasuries right now?
Absolutely. I mean, it's still, quite frankly, Liz, if you're even remotely risk averse, it's still the best trade. I mean, why assume risk when you can get 5.5% of your money in government paper and virtually no risk, you know, and wait for the dust to settle? I mean, it's in my opinion.
This right here, guys, like I said, and there's many ways to trade. There's many strategies. 5%, or you could have 100%. 5%, or you could be in the NASDAQ and be up 37%. Risk adverse, you shouldn't be in the stock market. Like I said, don't get me wrong, I don't want that to be let me rephrase that. The stock market in itself is a risk. That's why you hedge and you have different setups. You can have some in VTI. You can have some in treasury. You have some in assets, some in stock, some in gold, some in crypto, but why would you? 5% is nothing.
It's been a
every market
trade
is up over
for the
5%.
last 13 or 14 months, and it continues to be the trade.
Well, Scott Redler's into risk because that guy runs marathons and he does all kinds of crazy athletics. But also when it comes to his stock screens, Scott, you have said, and this is way more risky on the curve when you're talking about risk versus actual protection here, You just recently said right here on the Claimant Countdown that you had begun looking more at Bitcoin and at Coinbase in particular. Yesterday, we had Larry Fink of BlackRock on. They
Hey, I said
of course,
it. I've been screaming. I've been screaming. I ain't even gonna say nothing.
ETF, a spot
I'm not even gonna say
Bitcoin
nothing.
ETF. They are one in a long line.
Just let it go past. Let it go over your head. Let it go over your head like a
The
crop
others
duster.
have been rejected. BlackRock's still waiting. But here's what Larry Fink said that pushed Bitcoin in the past 24 hours to a one-year high.
I do believe the role of crypto is it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the
Bitcoin, Ethereum, XRP, XLM, HBAR, XRP, Bitcoin, XRP.
valuation of your currency, whatever country you're in. Let's be clear, Bitcoin is an international asset.
And that interview went viral, Scott. What do you think? Because it did spike. It has pulled back since then. We're at 30,309, but we were well above 31,000.
I agree with Larry. I think, first of all, he's a phenomenal
all-time
investor.
highs.
He's done so much for USA. I'm not going to get into it. And I do think that digitalizing gold would be like getting a spot ETF for Bitcoin. I think there are a lot of investors out there, a lot of probably even senior citizens that would like to have some exposure to Bitcoin, but they don't feel comfortable in an exchange. They don't even feel comfortable at Coinbase. But if they were able to buy an ETF that BlackRock has, at least they would feel safe that they're not going to wake up one day with an exchange going to zero.
Crypto was about to leave the damn space shuttle.
A lot of individuals were very against
BlackRock
ETFs
doesn't
for
miss
gold
now.
back in the day.
They've hit 8 out of 9 of the ETFs on first day,
physical,
on first attempt. And I think the one that they didn't came back and they still became an ETF.
And some people do it as a portion in their asset plan, like 5-10% for gold. I do think that there is a place for Bitcoin to be in an asset plan, 5 to 10% for those who want some exposure there. I do think it's a hedge against everything that Larry said. I'm not going to repeat it on that much time. But there's also ways to trade Bitcoin. If you trade it actively for a living like I have, a month or two ago, we talked about the technical setup that it could see 31,000. It just saw 31,000, reached the targets. Now, technically, I think if it could hold 27,000-ish, I think there's room for 37 to 40,000 by year end.
Teddy, I'm not even going to get into crypto with you. I know how you feel, but let's go to equities for the moment. If people are so eager to put some money to work, is there
Teddy
at least
is
a safe
99.
equity sector
This is
that
not
you can
even
look
his
at?
realm.
Well, there's a couple
That's
of
an
names
old
that we
school
like.
stock dog.
We like
Much
we like
respect
the
to
new
him, though.
Canadian Pacific, Kansas City Southern combination for
Did y'all
rail.
see
that? We
Look at these numbers up here.
like CVS for healthcare, and we like Chubb for insurance. And I think we like the insurance sector because they really do benefit from an environment of higher interest rates. The rail stocks are very unique and specialized, and healthcare is always a good place to put money. So those three names represent relative value for us. And if you twisted my arm and said, Teddy, I want to put some money to work, that's probably where I'd go, at least to start.
Okay, this from the guy who
Healthcare
bought
and women's
Meta way
clothing
before
and
it started running up.
beauty
So props
products.
to you.
Thank you.
Always a clean,
Scott, let me
smooth
get
move.
you on equities, and specifically, I know you're a technical guy, and you kind of eliminate the emotion and all of the headlines that go with some of the gyrations of these
25%.
names. But this is one of those markets at the moment where, as we started to plummet earlier today, where, as I said, the Dow was down 517, the S&P had been lower by 61, NASDAQ was down 224. The European markets took their cue and tanked. You have the CAC 40 out of France down more than 3%. The FTSE and the DAX in Germany, same thing. It was an ugly day in Europe. And I'm just guessing that this is a headline-driven market. So how does a trader or somebody who wants to eliminate the emotion trade here?
Well, first you have to figure out what you could handle. You have to see where the market is, what sector you're looking to get into. And we had a big gap up, if you remember, on
I'm staying
Friday,
over in
heading
America.
into July 4th weekend. Okay, and usually that's a typically great time. They like to push the market up ahead of that holiday, make everyone feel good so everyone could have their big hot dog eating contests. and then typically you get into a little bit of a lull. So you have to be a little careful. So you always have to be a little careful to define your risk. At this point, the DAX is now 5.5% off the highs in Europe. Not saying we follow the DAX or Europe, but everyone's talking about how we haven't had a 3 or a 5% decline in a period of time. So a day like today, where they kind of trapped some longs who were getting a false sense of security because we were holding that gap the past 3 days. I think a lot of traders, I pared down some risk today just because I was probably a little complacent, thinking that we were going to hold that gap and continue to 4,500 or more. And then today's hot numbers got me out of a little bit of risk. But what I do like to see is that the stocks that have been reliable for the last 6 months, that you can go to on weekends, like Apple was the first to go green after a 3-day pullback. Microsoft is strong. Meta's decent. You still have some high beta mega cap tech hanging in there because they have the balance sheets, they have the security. Rates higher for longer. Right now, you have to be.
Hey! Tech with a tech and your tech and tech. My portfolio didn't do nothing today. We didn't get hurt like that. My portfolio, I think was down like 0.25 basis points, something like that. Guys, listen. I scream it every single time. This tech rally is on the beginning. Institutions are highly underinvested in the market, and the dips that are going to come are going to be bought by institutions. These things where people are like, but I'm waiting for the next dip to come in. I'm just telling you, the next dip that occurs is going to get bought up quickly. The time is now to start planting those seeds so that you can have these levels of security as these stocks run, to where when those next dips do come, it's not even something that bothers your account portfolio. This is how you're able to make a long-term portfolio that has a solid foundation. The time is now to be jumping these techs. You're hearing it from the man with the big forehead. You're hearing it from the dude with the smaller forehead. You've got to come with it. You've got to get with it. Or you can miss your yacht. Or you can miss your thoughts. The choice is yours. The choice is yours.
And the regionals, because this area is when the regional banks started having problems.
Yeah, I'm looking at Apple right now. It has reversed. It has turned from down to up just barely by about a fraction of a percent, but still above the $3 trillion. Oh,
look at that. Microsoft is green and Apple's green. Amazon down 150 basis points. I don't actually hold Google. Meta barely down. It's funny how they just aren't showing Tesla. Ironic. I'm going to show y'all the news about that later.
Unbelievable. Scott, good to see you. And Teddy, the New York Stock Exchange floor fits you very well. Thank you so much.
I've been seeing Tesla on these broadcasts in the last 3 weeks. I ain't seen Tesla. In all honesty, I haven't seen Tesla at all on any of these. All right, let's get down to it. People, double tapping in as everybody sees. We finished off slightly green, still trading in the same range at $4.36, guys. But here is the cue, right? Here's the thing that's kind of crazy that's going on with our thing. Pulling across, cost to borrow. Of course, no shares available to borrow. Guys, listen, something's getting zesty. They're getting zesty. It's getting zesty. Like I said, I believe that we're going to have a judgment that comes down next week. Again, I have the expectation of reverse split, but like I said, it's all in the air. Like I forgot who that was that mentioned, but they said it's about a 50%, 6% chance. 50% chance. I believe they're saying 50% chance that it could be reverse split, or 6% chance it could be reverse split, and the other 40% not. I fully agree in the asset, and then, like I said, the thing that I keep getting across people is that we don't necessarily need her to say the reverse split's not happening. A delay on this, a delay is all we need is delay. A delay on this is gonna send this thing to the moon. A delay on this, and let's get further down. Let me get back down into why. I'm gonna tell you why I believe that. One, still sitting at 0 shares available. Let's double tap, and I just want to see some here. Boom. Okay. So what is this? The 5th. All right. So AMC is still on the threshold list as of most current date. Obviously, we'll have today's list tomorrow. But still on the threshold list. But bring it back through. 0 shares available. The shares they did borrow, 855.6% people. We are climbing are radically up to 1,000% cost borrow. Those super crazy numbers. The craziest thing that I'm seeing here, which I said yesterday, again, I explained it with stock loan substitution, but still nonetheless, this is insane. Short percentage at 31.3% volume, guys. Something is breaking in the background. Obviously, we knew that there was no shares, to do anything with. And of course, we know that this wasn't supposed to go this long, but they have tapped out, people. 31.3% shortage. That means that they're only shorting about 31.3%, which is why, again, AMC finishes green. We had the correlation where I said anything below 50% on that short percentage, you're going to see that stock begin to climb. Well, we're at 31.3%. We're supposed to be having rapid movements up there now. We're supposed to be seeing $5 at a 31.3% short percentage. The fact that we're still going green and they're having suppresses just showing me a little bit more. Let's double tap in here. Our cost bar average 972%. Cost bar max was 1,006% with a 22.65% short interest, guys. I don't know. And again, there's no way for us to actually be able to say what's actually going on or what's occurring. But what we can do is we can take definitive information, things that we don't see occur often, and put them together. One of those being the fact, what in God's, get this off my screen. One of those being the fact that one, short percentage, last time we saw short percentage of 1,000 was what? 6-8 months ago? What was that, about 8 months ago-ish? That we saw a cost bar max of 1,000? Was that around when 8 was created or shortly after? Was that towards that movement towards where it was going up to where, what, like $25, $26? Guys, we're at 1,000% cost bar max. 0 shares available. We're on the threshold list at the same time, which again, it's hard getting all these to queue because when they had us on the threshold list, magically it was going down. The magic threshold list disappears and they were playing the game. Guys, all signs are pointing that they are tapped to oblivion. But again, it's all riding on what that judge is going to say, and I believe that we're going to have us an answer next week. If we get a delay, if she pushes and says, hey, I haven't come up with a decision yet, we'll have to delay my response to, hey, lock them up and put your seatbelts on because that thing's going to sling. This is giving me high suggestions that these people are tapped to smithereens. Now, of course, we always know they can hit that fraudulosa, but the fact that all these things are kind of aiming together, we go, hey, we're not getting too hyped. We're not getting too excited about it, but hey, it's something to keep on your mind, guys. Something zesty is coming. Something zesty is near. Something zesty, like I said, we either going, what was the phrase I said? We either going, I forgot the damn phrase. All right, let's continue. All right, guys. With that sweet play that we all know and love, Tesla Y model breaks sales record in Iceland. Didn't even know we was up there, but yet again, Tesla, Nvidia, Microsoft, XRP, Bitcoin, HBAR, Ethereum, Apple, Path, Google. Did I say Amazon? Rivian now. Rivian, I'm putting that as a C-list play. C-list could graduate to B-list, right? But still in there. I picked up some shares on that bad boy. I'm not too mad about it. Rivian. Who else? Y'all know the bangers. Y'all know the bangers. I scream every single time. But like I said, Tesla Model Y breaks sales record in Iceland, becomes the biggest selling car in Australia. All right, hey, miss that yacht. Miss that yacht. I say miss that yacht. All right, double tapping in here, guys. Another thing that I dabbled into, everybody's probably seen the commotion. I'm not recommending anybody jump into this if you do not understand that this is a play in a trade. I'm talking about it's up. I'm up 10%. I might sell tomorrow, depending on how a GOAT continues on Friday. But like I said, none of this is verified. This is just I shouldn't say verified. It's all verified. This is not mean this is going to happen. But Mullen is let out a statement. They're planning on doing a share buyback, which obviously immediately sent the stock running. Stock was up at one point, I think like 60%. Currently up. Okay, Brandon. Currently up 31%. Hey, these are what we call swing trades. These are plays just like BBYQ. For those of y'all who do not understand how to sell and get out of things, do not come get in this play. This is a frauded play. Y'all know meme stocks. This is not something that we're going to come in and play like AMC was like, I want to hold this forever. But just so y'all kind of understand what type of play you're dealing with, look at the sentiment from it. From Moon Market. I believe David Mitchery is a whole person. I believe that's CEO of the company. I can freely express my own opinion. I will continue to freely express my opinion until I see him buy shares of Mullen on the open market. Even then, I will still dislike him. The PR today is not enough for Mullen shareholders. We need a form for insider. We need a form for insider buys from David out of his own pocket. The dude is a multimillionaire. Why won't he buy when the stock is down 99%? Read this from the PR today. The authorization of the stock buyback program does not obligate the company to purchase any shares and may be terminated or amended by the board at any time prior to its expiration date. And then, of course, basically what he's saying is there's an announcement of they're doing it, but they have not confirmed that they're doing this. This play is running off of literally FOMO and rumor. Buy the rumor, sell the news. That's what I want everybody prepped into looking at these plays like this. BYQ, like I mentioned. Mullen, this is not something where you need to come in and I'm going to hold this in for set it and forget it. You're going to cry. But as far as a trade where you can flip, I threw 200 in there. $200. This ain't no 5,000. I'm going to remake my account. Okay, all right. Lose if you want to. I threw $200 in there. I'm trying to look for a quick flipper in that thing. But like I said, we always like to bring those plays when those things are getting a little zesty. This is what we live for. These are things we live for. But like I said, guys, we're just staying tuned in. Obviously, going to give our coverage on Friday, but we're, next week is the launch pad for not only AMC, but for a lot of this market. You're going to watch these plays that I said, hey, load in while the spring's loading. Tesla, NVIDIA. Watch these plays go doodle with Tootsie right now. You got your little buy-in chance today. Tesla down 3% at 274. You got your little chance. Remember now, of course, we were licking all-time highs yesterday. Cover, hold. All right, watch how this pattern happens. You can't say somebody didn't scream it to you. Money Montgomery been trying to put it down for you from the beginning. All I do is say the truth, and I just don't mess with this type of stuff. I'm trying to tell you now. You can be on that yacht, the smaller yacht, the handicap yacht, or you can have a yacht of your own. Because like I said, I'm going to have a yacht of mine. I'm going to be swinging. There's going to be too many thoughts on mine, be having too many people on it. So I'm just telling y'all, do not miss the chance. The greatest generational wealth transfer under play. Do not miss this opportunity, guys. Listen, salute for being in the markets. Like I said, y'all know we're going to catch up with y'all boys tomorrow. Much love to y'all. I appreciate y'all. I'm glad to be here with y'all. And like I said, guys, get ready. That bad boy's going to get zesty. And everybody already knows what's next. Yes, sir.